Hi, so I want to quickly show you the calculation procedures for our assessment questions. You can open your book for chapter 6, assessment questions. I will use the information I received from one of our students. So when you read through the question, you will have to highlight all the information as our step 1 for chapter 6 to show you. The first one is to gathering all the information you can. So for this employees, he got biweekly pay, which is 26 numbers, pay period per year, regular rate $20 per hour, overtime 1.5 for 3 hours, vacation pay is 4%, which is accrued. Accrued, that means it's not going to be paid off per each pay. So you do not need to calculate the 4% in your gross earning. For federal provincial code 2, shoe allowance is $100. It didn't say that they paid by monthly or whatever. They're just saying that the employee get paid $100 safety shoe allowance. So we just assume that it's going to be one-time pay. It's cash. And then car allowance is $200 per month. Union dues $15. United Way is charitable donations is $20. Company social club is $20 per month. So when you need to deduct a company social club, you need to calculate the pay period. 70 hours is regular. And then what goes to life insurances is $35 per month. So we start with our gross earnings. I don't know. Here. Okay. So we calculate our wages is $70 times 20, and the overtime $3 times 20 times 1.5. And then you got shoe allowance is $100. We added the end. For now, we know that car allowance is a taxable benefits, right? It's taxable benefits. But because he got paid $200 per month, so we need to calculate it times 12. You get annual revenue and divide it by 26. Whenever we see a number and then we need to calculate the pay cycle amount, we always come up with the annual income or annual earnings and then divide it by the pay period per year. So this is bi-weekly, we divide by 26. If it's weekly, we divide by 52. If it's monthly, we divide by 12. If it's semi-monthly, we divide by 24. So it comes up with a gross earning, 1682.31. Now, when we finish our gross earning, we goes to pensionable earning. Pensionable earning and contributory earnings are two different things. Contributory earning, Canada pension contributory earnings is the pensionable earnings deduct the exemption. Okay, we'll go there. For right now, we got pensionable earnings. We start with our gross earning, 1682.31. We last the non-taxable allowance, which is a shoe. The safety shoe is $100. We last termination, 0. We plus add back the taxable benefits, $16.15. That is the group life insurance. So we use $35 times 12, get our annual earnings, and then divide it by 26. So come up with $16.15. So the total will be $1,598.46. You got a pensionable earnings. Now we go to insurable earning. We start with our gross earning again. We last the non-taxable allowance is $100 for the safety shoe. We last the termination, which is 0. And then for insurance earnings, we never need to do a add back of benefits, taxable benefits. So we came up with $1,582.31 for insurable earning. Now we calculate the CPP. As I said, that contributor earnings is different than pensionable earnings because we use pensionable earnings divided, deduct the pay cycle exemption. So it's $134.61. This exemption table will be in your textbook, page 39. If you're confused about a number you cannot memorize correctly, write it down. You're allowed to take it with you into your exam. Okay, so you come up with your contributor earnings, and then you times 5.25%. It's a CPP rate for BC. This is BC. I mean, the difference is only between in Quebec, outside Quebec. So this is outside Quebec, 5.25%. If you do not remember the rate, you can write it down and take it for your exam. And then we calculate EI. We use in server earnings, we already calculated, and times 1.58%. And it comes out with $25. This is your EI. Now, we're going to calculate gross taxable earning. Gross taxable earnings is always the same as pensionable earning. The only difference is if there is a termination expenses, you need to add it back. If it's nothing for termination expenses, it's the same as your pensionable earning. So for this scenario, these examples, pensionable earnings and gross taxable earnings are the same. Now we move out to net taxable earnings. We use our gross earning right there and deduct some deductions. What kind of deductions we need to deduct it? You can take a look at page 69. If there is an employee contributions to RPP program, or if there is a RRSP contribution, or there's a union dues, or there's amount claimed on a TD1. TD1 is the personal income tax exemption form. That the person living in a prescribed zone. And then, or there's some amount authorized by the Canada Revenue Agency. For example, there is a family support payment. If there's nothing for this scenario, there's nothing else except the union dues. So we use the gross earnings, deduct the union dues, we come out with the next taxable income. When we have our net taxable income, we can check the federal income tax and provincial income tax. Those two income tax are stated in the CRA website T4032. So I already sent you a video to show you how to find the correct numbers when you go to 4032, but make sure that this example from my textbook is 2019, but I believe for your textbook is for year 2020. So when you go to T4032, you're looking for the previous year's tax form, and then you're looking for 2020, and you open the federal income tax form. You go 4032, and then you go previous tax form, and then you click the 2020, and then you scroll down to the part D, and you find the federal income tax and provincial income tax payable. And then you're just looking for this $1,583.46 as a net taxable income in which salary range. And then you will find, because it's code 2, right? It's CC2. And then you will find out 133.15 is for federal income tax, 51.40 for provincial tax. After we finish the tax, we're gonna calculate our deduction, total deduction. We have calculated our CPP. We have calculated our EI. We have down federal tax, provincial tax, and then you have to remember all the union dues has been deducted from payroll. United Ways, you have to deduct from payroll. Social club was paid by $20 per month. So we'll have to calculate the social club. We use 20 times 12 divided by 26. You get a social club for pay period is $9.23. When you add all those up, it will give you a total deduction for your payroll, $330.63. For the total deduction, remember for this scenario, this is everything we need to add it in. But if you're in the other kind of scenarios, they always include your statutory, which is your CPP, EI, federal tax, provincial tax, court orders. There's nothing there. Complete compulsory, mean social club maybe, or employee optional withholdings, like charitable donations you want to go. Okay, so you always remember that we need to include all the deductions and you come up with the numbers. When you have your gross earning, when you have your total deduction, you use your gross earnings, deduct your total deductions, you come out with a net pay. That is the net pay. The real money goes to your checking account. Okay, so this is the examples from our chapter 6 assessment questions. Thank you. If you have any questions, just let me know.